All right, what's going on, everyone? In this video, I'm going to be going over my weekly forecast and what I'm really expecting going into this week. Looking at the economic calendar and how I really frame the week around what the economic calendar says, how you can use it for your advantage too, to help you make more informed decisions while trading, and how you can position yourself correctly in this NFP week. Hope y'all enjoy. Yo, what's going on? So in this video, I'm going to be going over the economic calendar, how to use it to your advantage when framing the week, and how you can actually position yourself to capitalize off of NFP week in general. So I want to be clear. The reason that you're watching this video is because you are a trader just like me. You want to learn more about how to properly prepare for the week, and sole intention of this video is to help you properly prepare for the week. So going into the week, this is my breakdown. This is how I structure my Sundays, how I structure me preparing for the week. So to start off, one thing I understand is that Monday is not a trading day. I don't trade Mondays. I've been in this market for 2+ years, and throughout this time, I've seen that Mondays tend to be low probability. Yes, you might have some days where it's a large range day and it is very high probability to trade, but one thing that I've seen is that more times than not, it tends to be choppy. It tends to basically engineer liquidity and create liquidity in the market. You got to think about it in terms of the market efficiency paradigm that ICT teaches, right? A majority of retail traders, the majority of the traders who are uninformed, who don't know about smart money, they're going into the week trying to just trade and get in the market as soon as the market opens, right? So as soon as 6 p.m. Eastern comes, they're trying to hop in the market on Sunday and trying to take trades. This is a very low probability. As professionals, as traders who understand what smart money is likely to do, we want to wait and position ourselves in the best possible times. Now, on NFP week, one thing ICT says that you can do is trade early in the week. So you can trade Mondays, all right? Tuesdays and Wednesdays usually tend to be high probability. But as for this Monday specifically, the reason why I won't be trading is because if we look on the economic calendar, we do have a bank holiday. So this is going to be lower probability to trade, and I don't want to be in the markets on this day. So looking at the economic calendar, we see that we have Monday as a bank holiday. Tuesday, we have 10 a.m. news, high impact news. Wednesday, 10 a.m. high impact news. We have Thursday, we have high impact news at 8:30, 8:15, and 10 a.m. And then Friday, we have NFP news coming in. So when I look at the economic calendar every single time I'm coming into the market, going into that week, I want to determine if I'm going to be trading early in the week or if I'm going to be trading more so late in the week. And how we can determine this is by the news. So if we have early news, where we have news from Monday, Tuesday, and Wednesday, there's more high impact news on Monday, Tuesday, and Wednesday, we can expect that to be higher probability rather than later on in the week. As for the opposite, if we have Wednesday, Thursday, and Friday to have the red news folders, then we can anticipate that that time of the week will be more high probability based off of right time, and then also where prices, where structure is, and where it's showing us. So going to this week, we see that we have news for the majority of the week. We have Tuesday, high impact news. Wednesday, high impact news at 10 a.m. All right, Thursday, we have high impact news, and Friday, we have high impact news. So how am I going to position myself this week? Well, any week in general, I understand that Tuesday and Wednesday tend to be higher probability. Thursday, okay, tends to be lower probability because it's the day before NFP week, and we tend to create liquidity before NFP actually happens. So looking at this news events, I actually see that we have Thursday high impact news and then Friday. What I'm going to do is be looking to trade Tuesday AM session, Wednesday AM session. Thursday I will be tape reading. I'm not going to be looking to take a trade. If there's something high probability, then I will look to execute, but it's more so going to be tape reading. And then Friday, after NFP releases, you can expect it to be higher probability then. So those are my days of engagement. I'm not looking to engage Monday, okay, because we have the bank holiday again. So this is how you can utilize the economic calendar to your advantage, all right? Understanding when do we have news in the week, do we have it early in the week or we have it later on in the week, and then blending that with price, where price is at, with the liquidity, FEGs, order block, that type of things, all right, where structure is, we can determine what's going to be higher probability to trade in, okay? So now going into the chart. So here's the chart. This is where we're at right now currently. we see that we actually been in a consolidation, okay? So one thing that I always like to note when I'm looking at the chart is the expansions and where we're currently at in price. So we see that we previously expanded higher, okay, closing above this high, and then now we traded back in the range here. So this, just looking at the price alone, can be kind of confusing. You can kind of, be misdirected on where price is likely to go. But when you put lipstick on the charts, when you actually start marking out key liquidity pools, it makes a lot more sense. All right. So what we see here, this is my weekly analysis. Okay. One thing that I love to mark out all the time, because this offers me narrative of where price is likely to go, is the liquidity pools. So this could be session liquidity pools. It could be daily liquidity pools. It can be weekly liquidity pools. It can be monthly liquidity pools, even yearly liquidity pools. All of these liquidity pools offer narrative of where price is likely to go, and how we actually form the delivery around those levels will show us how we want to trade. Okay, so as we see, we have the high of July here. Okay, this is a monthly liquidity pool. It's classified as a monthly liquidity pool. Why is this important? Because when we look at liquidity pools, these are where stop orders are going to be placed. People have orders at these liquidity pools since there's time in between these liquidity pools, right? A lot of orders are stacking at these highs because retail traders are not expecting price to go there, or they're expecting, price to continue lower, and they're putting their stop losses above these highs. And also, when we close above these liquidity pools, you have breakout traders trying to trade the breakout for higher prices because they think price is going to continue higher, going to 25,000, and they want to trade the breakout. Now, smart money positions themselves at these liquidity pools because there are orders resting here. So we see that we have trailed stop losses that are above this July high, and then we also have breakout traders trying to trade here. All of that liquidity will actually create liquidity for the smart money to use as counterparty to what they want to do. So if they're going to want to sell, they're going to actually want to trade up higher, and basically activate all those buy stop orders that are above these highs, and then they're going to move the market lower because that's putting these traders at the maximum loss. All right, the maximum amount of loss is happening here since we have traders who are going to be trapped, in longs, and then also traders who are going to be stopped out if they're in early shorts. So that's what happens. So what I see here is that we trade above July high, and I also have July low marked. Okay, you all highs, weekly highs, daily highs and lows, session highs and lows. These will offer narrative to where a market maker model will play out and where price is likely to go. So I see that we have July high taking, and what happened? We displaced lower into the range. We closed above July here, forming an order block. This is an order block candidate since we're closing above, right, a key liquidity pool. This creates an order block candidate. And what happens is, in the previous week, we actually traded into the 50% of this order block, all right? And we actually rejected that 50%, and then Friday traded lower. So the reason I'm looking for price to actually go lower this week is because of monthly high taken out. We have this displacement back into the range. Last week formed an OTE retracement back into this displacement leg, and then we also have trailed sell side liquidity here in the market. So we see that we have these low resistance lows. Okay, if you can draw a trend line on them, then it's low resistance. So I'm anticipating that price is going to want to gravitate towards these lows simply because traders will place their stop loss underneath these lows. Trend line traders, people who actually are retail and they just trade trend lines, they're going to think that price is going to bounce. Here again, we have 1, 2, 3 bounces on this trend line. And so they're going to think that price is going to continue to bounce. But smart money, what they'll do is they'll run it against them, okay, and take out all this trending liquidity. So I'm anticipating that to get taken out, and also price to gravitate towards previous monthly low, which is July low. Again, you always have to have a narrative of where you want price to go. This is how you have high probability trading. This is how you have success in trading, is by having that narrative of point A to point B. So I'm anticipating that July high is going to get taken. And then now, since we actually have a displacement back into the range, we have a retracement that happened, trading back into the order block, and now we've displaced lower with the previous Friday candle. I'm anticipating the early on in the week to want to start to trade lower, and then us to gravitate towards the sell liquidity. Now, one thing I'm watching going into the week is if we're going to show willingness to actually close below this opposing FVG, this daily FVG here. I want to see price actually close below this. This would make this an inversion FVG. When we have an FVG that was utilized to the upside, all right, like we have here, we see a swing low in here. When we close below it, that would actually become a inversion FVG, and price will basically utilize this area for resistance, and price is going to trade lower. So that's what I want to see happen, if that's going to happen, right? We create if this, then this protocols in trading, because that helps us be more objective in our approach. And so that's what I want to see. If price fails to do that, then potentially we can see price consolidate in between this daily FVG and then also this order block right here until we actually form a breakout. Now, that's what I want to see going into this week in terms of price and what price is doing. We also see that here we have an SMT, okay, with ES. ES actually took out the all-time highs that were created in August, while NASDAQ didn't, and we actually formed an SMT on the weekly. So SMT is a divergence between correlated assets, all right, and this shows us a crack in correlation in a potential asset, and it shows the end of a manipulation leg and then the potential start of a distribution leg. So seeing that, I want to see price basically confirm this SMT by breaking this bullish FEG and then trade lower into the sell side liquidity there. So looking now, now we're gonna blend the price and then the time in terms of the economic calendar. If we're looking at the economic calendar, one thing that I want to be utilizing is weekly profiles based on the news. Okay, so I have a bunch of algorithmic deliveries that price tends to do over and over with the weekly profiles. Okay, so this is literally what I want to be looking at to determine what's going to happen going on to the week. So I'm bearish going on to the week, so I'm going to be looking for the bearish profiles to look at. Okay, so this is what I'm doing every single week, you know, trying to anticipate what's likely to happen. Now 70% of the time, if we're going to be trending, ICT says that the high of the week will be in by Wednesday. Okay, 70% of the time in a trending profile. But sometimes what happens is with NFP week, we can see later on in the week the high be formed and then displacement happens. Okay, so I'm anticipating that price would want to actually form either a Tuesday high of the week, Wednesday high of the week, or a seek and destroy bearish Friday profile. Okay, the reason I say this is because this is unique to NFP week, and this is actually what can happen during the NFP weeks. So we see that Monday, Tuesday, Wednesday tends to consolidate. We have Thursday make a manipulation run up into a higher time frame level, and then Friday displace lower. So this is what could potentially happen going on into this week. And what I want to do is just be monitoring what Monday does, what Tuesday does, and see how the rest of the week plays out with that. Okay, so that's what I'm going to be looking at. I utilize those weekly profiles a lot because that shows me when engagement is going to be higher probability. I always want to be trading in line with the weekly candlestick. All right, if the weekly is going to expand lower, I want to be trading in line with that. So basically, I want to position myself within the distribution of that weekly candlestick, and I want to wait for the manipulation to be done with that candlestick. So if Monday is used a lot of times as accumulation, which it is, then I want to see either Tuesday, Wednesday, or then I want to see either Tuesday or Wednesday, create that high of the week, and then the distribution start going on later into the week. Now, if that doesn't happen and if we just consolidate, then I'll be looking for, of course, Thursday to make that high, and then we trade lower. But that's what I'm looking for, and I'm going to be monitoring it going later on into the week. So one thing that you guys need to know in trading is that less is more, right? Less is more in the market. I'm only looking to engage 2 times in the week, right? I'm only looking for 2 high probability opportunities that manifest throughout the weekly range. Less is more in trading, and you want to use more size and less amount of setups, less action, all right? High probability trades. This is the one thing that separates the profitable people from the people who are not profitable, is picking their shots wisely and knowing when to stay out and do nothing and when to actually engage. So you have to identify your high probability days of when you want to engage and then go in. So that's what I'm looking for this week. I'm looking for that draw going towards the sell side liquidity there. I'm going to be even more confident in this analysis if we break this FEG here and use it as inversion. Alright, so this is the 1 hour time frame, and on this time frame I just want to be actually zooming in to the coordinate time frames and looking at what I want price to do based on the arrays that we have here, because this will show me and give me a more precise view of where price is likely to go and where it's likely to trade to. So if it actually traded lower in the previous week, okay, we traded below this previous day low right here and we're consolidating now. So one thing that I do want to see is if we have a willingness to actually pop up into this FEG here, all right, and then form some sort of high here, some intermediate term high, and trade lower, breaking this 1 hour FEG and then retracing into it and utilizing as resistance. This is the same FEG on the daily. Now we've zoomed in onto 1 hour, so now we see that this daily FEG is actually within this 1 hour FEG here too. So this is what I want to see. And I want to see price trade below this FEG into these, okay, relative equal lows here from the previous week, and yeah, trade into there. So that's what I'm gonna be looking for. I'm gonna be monitoring this specific FEG right here and what we do. Okay, this FEG is formed within a kill zone, so this is actually higher probability, and I want to see price trading to there, you know, basically probably Tuesday or Wednesday. Let's just say we consolidate Monday, you know, Tuesday trades into it, or Wednesday trades into it, and then I want to see a reversal form there, us get a change in the state of delivery and price trade lower. So that's what I'm gonna be looking for going into this next week. And I just want to be watching and seeing what Monday's doing when we're trading into this array, and then the reaction that we get there. So if you can see on the chart, what we're actually looking at is a market maker sell model that is in play right now. So market maker models are literally how the stages of how price is delivered from point A to point B, and this is fractal, so this goes throughout the whole market. All right, I'm not gonna get too much into it. I'll have videos coming later on these, but basically this shows us where the draw on liquidity will be. This shows us where we should be getting our entries at, you know, our point of interest, and where we should be looking to take action. So I'm looking for the sell side curve of this market maker model to be completed going into this week, and the SMT here that we have with ES, that actually shows us that the smart money reversal is in and that we're gonna get a reversal. We get displacement, breaking opposing levels, all right, and now we want the bearish levels to hold and us to trade lower. So this is what I'm looking, you know, at going into the week, and I'm expecting this to play out. I'll be even more confident when we break this FEG here. So I hope y'all enjoyed the video. If you got value out of this video, I would appreciate if you like, subscribe, and then share with anyone that you think would also get value from this video. I'm going to be looking to drop a lot more content, Lord's willing, things that will help you guys progress to the next level, not only in trading, but also in your everyday lives and your relationships with Christ, relationships with God. I want to be transparent on this journey. This is not easy in trading. It's not easy. There's risks that come with trading, and none of this that I say in this video should be taken as financial advice. I just give out what I'm looking at based on my previous experience and to provide some guidance to people who may need it. Dropping a lot more value on my X account, so feel free to give that a follow too. It's going to be a lot of tips and just advice, you know, being entrepreneurs in this day and age and how you can get to the next level and become a better person in general.